Hi guys. Today we will analyze Hibbett stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been a bad performer in the overall market. Both the long and short-term trends are negative. It is better to avoid buying stocks with negative trends. Support levels are around $45 and $29. The next support level is around $14. Resistance levels are around $49 and $55. The next resistance levels are around $70 and $79. In the last month the stock has been trading between $40.30 and $58 range, which is wide. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 0.5 million. It's not a very liquid stock. The stock has been in downward trend since November 2021, be careful. The stock is currently trading in the lower part of its 52-week range, which is not a good signal. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth. Even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 12% per year, for last 5 years. We see that the average profit margin of the stock has been around 5% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 209% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Hibbett Company: bad, average, and good. First scenario. Hibbett will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, 0%. Future profit margin would be a low, 2%. Future free cash flow to net income rate would be a low, 80%. In this case, the fair value of the stock today would be $28. Second scenario. Hibbett will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 2%. Future profit margin would be average, 4%. Future free cash flow to net income rate would be average, 90%. In this case, the fair value of the stock today would be $46. Third scenario. Hibbett will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 4%. Future profit margin would be high, 6%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $69. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 10.8. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Hibbett, analysts forecast growth rate around 6% per year in next 5 years, and future P/E around 5. Again, I will use 3 different scenarios for Hibbett Company: bad, average, and good. First scenario. Hibbett will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 0%. Future P/E would be a low, 5. In this case, the fair value of the stock today would be $19. Second scenario. Hibbett will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 2%. Future PE would be average, 7. In this case, the fair value of the stock today would be $33. Third scenario. Hibbett will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 4%. Future PE would be high, 9. In this case, the fair value of the stock today would be $50. As you can see, today the stock is fairly valued, $45, if we expect the company's high performance in future. The fundamentals look good and the company is debt-free. The stock is currently fairly priced. However, the stock has been in downward trend since November 2021, and in the coming 5 years Hibbett will show a small growth in the revenue. Also keep in mind that it's not a very liquid stock, and its growth is limited. Do your due diligence before buying the stock. Company's strengths. Hibbett, formerly Hibbett Sports, operates as an athletic specialty store. The company operates approximately 1,080 Hibbett and City Gear specialty stores located in 35 states. The company offers personalized customer service and access to coveted footwear, apparel and equipment from brands, such as Nike, Jordan, and Adidas. Successful track record of integrating complementary firms through mergers and acquisition. Superb performance in new markets. Hibbett has built expertise at entering new markets and making success of them. Over the years Hibbett has invested in building a strong brand portfolio. Hibbett has a return on assets of 25% and return on equity of 60%. This is amongst the best returns in the industry. Its profit margin of 10% is amongst the best returns of the industry. Risks. Limited success outside core business. High attrition rate in workforce. Need more investment in new technologies. Investment in research and development is below the fastest growing players in the industry. Intense competition. Stable profitability has increased the number of players in the industry over last 2 years, which has put downward pressure on not only profitability but also on overall sales. Hibbett competitors include Foot Locker, West Marine, Dick's Sporting Goods, Big 5 Sporting Goods and Academy Sports and Outdoors. Based on estimates for the next 5 years, Hibbett will show a small growth in earnings per share. The EPS will grow by 5% on average per year. The revenue will grow by 6% on average per year. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.